So let's talk about the next 1.5 trillion. What is it going to look like to get there, to 3 trillion? How fast will that happen, you think?
How fast will it happen?
Yeah.
Inside of 5 years.
Okay.
And that's just math. If you look at the indexed growth rate for private credit, without some of the things we should talk about driving the future growth, it's been roughly 10 to 15% annual growth rate.
Okay.
Right. So if you just compound that, that'll tell you that the market will double over the next 5 years. Maybe would it be helpful just take a quick step back and say, how did we get to the first 1.5 trillion? Because I've been in this business now 25, 30 years. No one ever wanted to talk about private credit. Now it's all anybody seems to want to talk about. I wouldn't say it's my time, but it's
yours and others.
And others.
Yes.
We like to we share. It's not like this happened overnight. So there is this overarching narrative, I think, that's prevailing in the media and the investment world that there's this whole new asset class that has just emerged, out of nowhere to take the world by storm. And I think it's important to understand how this has happened, and that if you really go back and look at the development of the market, it's been keeping pace with a lot of structural changes that are happening in other markets. For example, if you look at the public equity markets, they've been consolidating, they've been moving to scale. The average market cap of a public company today versus 20 years ago is 500% of what it was. Banks have consolidated in a significant way in the US. There has been overarching regulation coming through the great financial crisis as well as the Basel frameworks. You've got the leveraged loan and high yield markets that are also moving to scale. So behind this what seems to be cataclysmic growth in private credit, you've had real structural changes happening in all of the adjacent markets that have set us up for this moment. Knowing that that has created white space, then you have to say, well, what other structural changes are going to happen to get us to the next 1.5 trillion?
Sure.
Because the reality is if all we do is finance the existing equity that's in the market, we'll get there. So maybe you should say, what is it going to take to get to the next 3 trillion? And when you look at what was that?
I was going to say.
Don't publish that as like a big out of context headline like you guys usually do. But
we would never do that.
The U.S. banking system has gone through a 2-3 decade period of consolidation. We are still massively overbanked. So we went from 8,000 FDIC insured banks to 4,000. I think the next largest developed economy in the world has maybe 100.
Right.
So we've had this slow move to consolidation. I think some of what we saw earlier in the year with Silicon Valley Bank and PacWest and others is going to accelerate kind of what I would call phase 2